Hey guys, welcome back. I hope you had a really great day trading today. So today was Wednesday, April 2nd. And if you were day trading today, we had a rather normal trading day. But if you're holding overnight, if you are doing some swing trading, we definitely had a very big move in after hours today. So I'm going to be going over today's intraday move, this drop that we had after hours. And then today in the members video, after this video, I'm going to go over tomorrow's implied move the way it normally is. And then after that, I will give some quality trade setups. Once we know what the width of the spread is, some good setups underneath that we can look to, since we will very likely open outside of the implied move tomorrow. So a lot to go over today. I may not be sleeping very much today, but let's get started. So, starting in SPY today, we did open with a drop down, and our spread today was 553, 550, and that did fill just a little bit above 25% of the width. So we didn't quite make it into this box over here where we would have gotten more fills, but we did get close enough to get some reasonable premium down here. And then we did swing back up. If you were looking below, we did find support on the signal line, and then we swung back up, took it above the 35 EMA, above the 30-minute 200 moving average, took it all the way up to the down gap from PCE last week. That was Friday's down gap. We filled that gap and then got rejected back down. And into the end of the day, we did bounce on that 35 EMA and brought it back up above the 30-minute 200 moving average. Now in after hours, we did see a pop all the way to the top of the implied move on the next day's contract, so close to 572. And then we saw a huge sell-off all the way outside of the trading range. So from top to bottom, the top of that wick to the bottom here was almost a 5% move today. Huge after hours move. So today, if you were on the 0 DTE, that expired within the implied move. It was a very normal trading day until after hours. SPX, we did see a gap down at open underneath the 35 EMA, down to the bottom of the implied move. We didn't quite get to the bottom of the implied move. 55.55, 55.30 was the spread that I traded today, and we got close enough to the bottom to fill that very first order, which is 25% of the width. We had a $25 wide spread, so 25% would be selling that spread for $6.25. Now my actual fill was $6.40, so I got a little bit more. Right after that, we swung back up. You could look right here. We did find support on the signal line, and then from there we brought it all the way back up above the 30-minute 200 moving average. We filled this down gap from PCE last week. This was last Friday's down gap. Today we filled that, and then we did see that level as resistance. So 56.93 is a resistance now, and then we drop down after getting kicked out of this gap down to the 35 EMA, and then into close we popped up and got back above the 30-minute 200 moving average. So we don't have after hours trading in SPX, so let's take a look at ES today. So ES, right after markets closed, this is that first candle, we took it all the way up and then we dropped. So this line right here, I have a feeling that is the weekly 35 EMA. It is. So we basically took it all the way up to the weekly 35 EMA. Remember, that's the line that defines our uptrend, and it was resistance immediately. We dropped, and once the 35 EMA becomes resistance, it can be a very strong level. So red signal line here on this time frame, and let's go back to SPX. So here we did have a very normal intraday trading day, and then after hours took that big drop in futures. Right now we're down 2.77%. So putting that over SPX, if we open down 0.2 or 2.77%, that will take us right here to just underneath this uptrend. So that we can look at on the 1-day time frame. This is the uptrend support. That after hours move would actually take us underneath this uptrend. This 35 EMA right here is sitting right on top of the 200-day moving average. So it's very likely we wake up tomorrow with a bearish daily time frame. That is huge. So SPY closed up today 0.63%, SPY up 0.67%, VIX down 1.19%. So VIX is probably not going to be the most reliable thing to look at tomorrow. Well, maybe tomorrow after we open, but from where we closed, options are likely going to be pretty far off today. I'm still going to go over the range and what we can do to find better spreads tomorrow once we open. So VIX down 1.19%, and intraday we did stay completely within the implied move. All right, so let's move on to QQQ. Pretty normal trading day over here. Intraday we did drop down underneath the 35 EMA, took it all the way down to the bottom of the implied move, or pretty close. So these spreads right here, if you chose, the one we talked about in last night's video was 464, 461, and we did get close enough to there to fill 25% of that. So we would have gotten one fill before pulling back up all the way to the 30-minute 200 moving average, just short of the top of the implied move here. So believe it or not, we would have had both ends fill. 481, 484 also got close enough to get one fill. And then when we did get to the top of the implied move here and just above this 30-minute 200 moving average, we did bring it back down, took a little bounce on that 35 EMA into close. We did close green here, up 0.73%. VXN down 4.64%, and we did close within the implied move intraday. And then let's take it to extended hours here, and you could see that wick came all the way up, hit the top of the implied move on tomorrow's contract, and then reversed all the way down outside of the implied move for both days. But if you were on the 0 DTE contract like I was, we did close within the implied move, and we did get 100%. All right, IWM. We opened here underneath the 35 EMA, and we dropped down, tested this support right here. This is 198, and 198 is a level that we have seen quite a bit in this past year. So we did bounce back up, and you could see that we did have a fight here on Stupid Willie to hold this level, and after hours today probably broke that, but with regular trading we did have a fight to close above that. So let's zoom in a little bit. After that drop down to just below support, we pulled back up, got back above the 35 EMA, which we have seen as resistance since middle of last week. This is before PCE. PCE, we got that big rejection from the 35 EMA. All week we've been trying to get above it. Today we actually got above it and to the 30-minute 200 moving average. So 30-minute 200 moving average just underneath the top of the implied move at 204. 205 was a great spread right above that, and then we got pushed back down to the 35 EMA and closed just underneath the 30-minute 200 moving average. Super normal day in regular hours. Let's take it over to extended hours and take a look there. So at the end of the day, after markets closed, we popped all the way up outside of the implied move, and then we dropped all the way down and closed outside of the implied move on the bottom side. So what was that move? From top to bottom, 7% in after hours. That is a massive move, And I have a feeling that we've really just begun pricing in the effects of tariffs. For now, I don't think volatility is going anywhere. So let's get back to regular hours and take it over to, real fast, IWM closed up 1.58% intraday. That was a big up move. And RVX down 1.85%. We did trade completely within the implied move here today. And DIA, this week we have had the 35 EMA and the 30-minute 200 moving average, and look at how closely they've been trading. Let me take price out for just a second, and you could see right here, this was indecision, deciding which way to break. And with price in, you can see we've had some pretty violent moves back and forth, above and below. Today we did break above that, took it to the 200-day moving average. I did mention this in last night's video. Then we did see resistance at the downward facing 35 EMA. We had the bear gap in here that we filled, and we got pushed back down to the 35 EMA. So price moved very predictably intraday. And then in extended hours, now this is going to look a little bit funny because this trading range is offset, but this is after hours right here. We did see a pop all the way up to the top of the weekly implied move. That's on Friday's contract. And then from there, we dropped it all the way down to the bottom of the implied move on the day at 411. We stopped right above this up gap right here. Zoom out and look where that goes. So that is the up gap right after the drop, middle of this month. So we are still above there. You could see on the daily time frame, we have been building this little support on Stupid Willie here. We got a bounce earlier in the week, and we'll see if how we open tomorrow affects that at all. So back to regular trading hours here. Let me see if I see anything else before we move on. Okay, so this is the regular trading day, and we in after hours are down here near 411, which does mean we are going to be under support. So 415 could possibly turn into a resistance level here. So that is a recap of today. Coming up next, we do have the members video, which I go over tomorrow's trading ranges, and in tonight's video, because of how we had that huge reaction in after hours, I am going to have a special segment on how to choose a quality spread tomorrow after we open, after we see how we actually open. So if you're not a member yet, consider joining. We go over a ton of great information for the next trading day. Everything you're seeing on the screen today is based on last night's members video. And tonight I am going to be introducing a new skill for extra volatile days. So hope to see you guys over there. If you're on an iPhone, you cannot join from the app on your iPhone. You do have to take it to a browser. But once you have joined, you can get the videos on your app. That's something that's been coming up lately. Hopefully I'll see you guys there. Have fun, trade safe, make sure you take profits when you're up, and I will see you guys tomorrow night.